Levi Strauss out with a beat on earnings in its latest quarter. However, a stronger US dollar, weakness in Europe, and ongoing supply chain disruptions led the jeans giant to cut its outlook. With more on this, we have Harmit Singh, Levi Strauss CFO, for more on this quarter. Harmit, great to get some time with you. I want to go across the pond on Europe. I would say some surprising results out of Levi's Europe. Did that business, how it performed, sales under pressure, did that surprise you?
Hi, Brian, good morning. As the quarter progressed, it did surprise us. As you know, we have a very strong brand. As you think about the quarter overall, our quarter was fairly solid despite all the incremental headwinds. We were up 7% in constant currency. We beat EPS. The Levi's brand registered the strongest quarter three revenues in a decade. As you think about our European business, the weather was fairly warm and the consumer there is under pressure. And so what we did collectively as a team is we quickly geared up into action and looked at discretionary costs. We focused on our direct-to-consumer business. Because we have a diversified business model, there are parts of the world that are really strong, like Asia and Latin America, and they registered strong growth. We also had some supply chain disruption, especially in the US, which impacted the business. And so as we thought about the year, we said, okay, let's think about three things that impact the results. One is stronger dollar. The second is supply chain disruptions. And the third is, softening consumer demand in the western part of the world. But if you think of Europe, Brian, there are parts of Europe that were fairly strong. UK and Spain, were actually countries that grew. I think where we were soft was in Germany and France. The brand's still fairly strong, globally as well as in Europe.
When you talk about softening demand, Harmit, is there a relative point that you think back to where this period is analogous to?
I would say, as a company, we've been through, good times and tough times. And I would say, as you think about softening demand, I was not here in 08, 09, but, the financial crisis at that time did have an impact. As a company, our toughest period was during the pandemic, where all our stores were shut for about 90 days, and we lost $1 billion, just like that. But as a management team, and I'm really proud of the management team that's been around for a while, we actually geared up into action and said, okay, how do we manage through the crisis? But more importantly, how do we emerge stronger? And then in 2021, we registered our strongest financial year in a decade. So as we think about the next few quarters, and as if things do tighten, that's what we're going to be doing. We're going to be thinking about how do we manage through the immediate crisis, which is in the near term. But as a company and a brand, we will get out of it, and we'll get out of it stronger. Some of you were there at our Investor Day in June. We laid out longer term targets. These are what we call North Star targets. We're still geared to and focused on delivering them over the longer term and emerging out of this as a stronger company.
Harmit, I appreciate the focus on the longer term. I have one more shorter term question, which is after the inventory build, which I believe was above 40% for the last quarter, are you putting things on sale? How are you guys planning to clear out that inventory?
Yeah, so the inventory build is something that we have flagged, externally as well as internally. So, it's intentional in a way. It's basically comprised of three things. The third of the inventory growth is driven by the fact that last year was a very low base, tight inventories, and the fact that inflation has increased the cost of inventory. A third is inventory that is driven by the fact that we're bringing, because of the longer lead times in supply chain, we're bringing stuff early, and we're getting ready for our ERP installation in quarter two of next year. And a third is largely goods in transit. 2/3 of our inventory is core. So think the 501s, think the 511s, and we can carry that through multiple seasons. And so there's no reason to discount that. We don't have a lot of obsolete. Where we do have obsolete, we are discounting that so that we can clear it. But overall, if you think of our gross margins in Q3 were still, 400 basis points higher than 2019. It dipped a little relative to last year, but that was largely driven by foreign exchange and a little bit more discounting. We do expect the holiday season to be a little bit more promotional, and we're going to balance growing revenue and discounting because the brand's never been this strong. And that's evidenced by the fact that Q3 revenues for Levi's were the strongest in a decade for quarter three.
When you acknowledge discounting, it's hard not to think about the strongest brands right now needing to move through inventory, imploring some of the promotional elements. And so when you think about the percentage of full price that's selling versus the percentage of what would actually be discounted during this period of time through the holiday season and even perhaps thereafter as well, what does that breakdown really look like to you?
Yeah, still a lot of what we sell is on a full price basis. We had estimated that our gross margins in the second half of the year, because we'll be selling more below full price, would be impacted about 100 basis points. In quarter three, that was a little bit more, about 130, 140 basis points. We built that into our guidance in Q4. But overall, we still think we'll end the year at about 400 basis points higher than 2019. And that just evidences the strength of the brand. Our AURs, for example, which is the average unit retail price in quarter three, was still up in the mid to high single digit. That means pricing that we have taken to offset costs is sticking. And our revenues were up slightly. Our unit growth was up slightly. So overall, the brand's really strong. Dockers, as we have diversified, also grew low double digit. And Beyond Yoga is just starting. We just opened our first store in Santa Monica in LA. And if that does well, then we can add many stores in the activewear segment. So overall, our business is fairly diversified, Brad, and our thinking is that we will move through this promotional environment by ensuring that our brand equity continues to build.
Hey, Harmit, it's Brian here again. I'm a loyal Levi's consumer, but I don't know. I don't know if I'm buying these new baggy dad jeans that you're bringing to market. I don't know if you realize how strong I work for this physique, and those pants are not going to show that off. I got to be honest with you.
The fact is that we're a democratic brand. We have something for everybody. So if the baggy dad, jeans is not what you like to wear, it doesn't fit your style, you can wear the tapered look, you can wear the slimmer look. There is something for you, Brian, and for everybody else across all age demographics, at Levi's. And that's what, we are proud to ensure that every consumer gets what he or she needs.
Yeah, Brian, Sozzi's has got to rock the jorts to show off the gams. He's got to show off the legs.
Look, I'm still the skinny jeans guy. I mean, you got to show off the glutes. You put that time in. I want to show them off in a nice pair of jeans. I don't know.
Those are a little out of fashion here, Straus. But we'll take this offline. Offline. Harmit, it's great to see.
It's not only jeans that you can get from Levi's. You can get more of a head-to-toe look. I'm wearing a wonderful Levi's shirt. Gives a casual look because we continue to believe the world's becoming more casual. And if the world's becoming more casual, brands like ours that offer more of a head-to-toe look, are the ones that will lead the charge.
Yes, no matter which of the numbers of the models that you wear on the bottom. I have to say we were expecting either the leather jacket or the jean jacket, Harmit. So it's good to know you're still repping on top with the white shirt. Harmit Singh, great for catching up with you. Levi Strauss CFO.
Thanks, Julie.